You can view the original version of this presentation, including all slides and resources, on our official website, SlideGround, and on our SlideShare account. The links are available in the bio of this account. So, have you ever stopped to think about the sheer impact, the massive ripple effects when a government suddenly decides to, well, pull huge amounts of cash out of the system, almost overnight?
Yeah, it sounds pretty dramatic, almost like something from a thriller.
Exactly. But it's a real policy, demonetization, and it has these profound, far-reaching consequences. Today, we're going deep into that, focusing specifically on India's big experiences with it.
And crucially, the knock-on effects this had on its neighbor, Nepal. That connection is key here.
Right. Our entire deep dive today comes from this really thorough presentation. It's called Effect of Demonetization in Nepal, put together by a team from SOMTU-MBAFC.
It's packed with information.
It really is. And we're going to try and unpack the most important bits for you.
Yeah, our role here is really to pull out those key insights. Understand that very intricate currency relationship between India and Nepal. It's quite unique. And ultimately just grasp the lessons learned from this, well, major economic event.
Okay, let's kick off with the basics then.
Okay.
For anyone maybe not familiar, what is demonetization exactly?
Okay, so basically it's when a country's government or its central bank decides to withdraw certain currency notes from circulation. They pull them back.
So, old money out.
Right, and they might exchange them for new notes, or sometimes they just become invalid, worthless. It's kind of like hitting a reset button on part of the cash floating around.
And why would they do something so drastic? What are the typical goals?
Well, according to the source material, the stated reasons are usually pretty ambitious. Things like controlling inflation, too much money chasing too few goods.
Okay.
Fighting corruption is a big one, trying to hit that hidden or black money. Also, stopping fake currency from circulating. And increasingly, especially in recent times, a big push is towards promoting the digital economy, getting more transactions into the formal banking system, making things traceable.
It's just fascinating how a policy aiming at these huge, macro goals can suddenly change everything for ordinary people.
Absolutely.
You wake up one morning and the cash in your wallet, maybe it's not worth anything, or you've got hoops to jump through to exchange it. It's powerful, but wow, the potential disruption.
Huge potential.
Now, you mentioned India's experiences. The big one in 2016 that made global news wasn't actually their first time doing this, was it?
No, not at all. India actually has a history with demonetization going back quite a way.
Let's walk through that timeline then. Where does it start?
Okay, so the first really notable instance was way back on January 12, 1946, post-war era.
Right.
Back then, they withdrew the high-value notes, the D.O.1000 and the 10,000 rupee notes. Huge sums for the time.
And the goal then?
Yeah.
Similar.
Pretty consistent, actually, targeting unaccounted wealth, trying to clamp down on tax evasion. But the effect was, well, minimal.
Why was that?
Simply because very, very few people actually had those high denomination notes. So it didn't really touch the general public. It was quite contained.
Okay, so that was 46. What came next?
Then we jump forward to 1978, January 16th, under the Janata Party government.
Right.
This time, they pulled the 1,000, 5,000, and 10,000 notes. Again, high denominations.
Same objective again, targeting hidden wealth.
Exactly. Targeting black money, trying to reduce corruption. And like in 46, the impact was mostly felt by the wealthy. The average person wasn't really using these notes day to day.
So these earlier attempts were more like targeted strikes, you could say.
That's a good way to put it. Surgical strikes, almost. Limited impact on the wider population.
Which brings us to 2016. This is where things get, well, completely different. The scale was just massive.
Oh, absolutely unprecedented. November 8th, 2016, the government announced the withdrawal of the 500 and 1,000 notes.
Which were very commonly used notes, right?
The most common high-value notes.
Right.
And here's the kicker. Those two notes together made up something like 86% of all the cash in circulation in India at the time.
86%.
Yeah. Just think about that. 86% of cash suddenly demonetized. The objectives were similar to before: black money, fake currency, corruption, but with this huge new emphasis on pushing digital payments and getting people into formal banking.
And unlike 46 and 78,
this one hit everyone, from the street vendor to the big corporations. Nobody was unaffected.
So, okay, 86% of the cash is basically unusable overnight.
Right.
What did that look like on the ground in India? The immediate aftermath must have been chaotic.
Chaos is a good word for it.
Uh-huh.
Immediately, there was this severe cash shortage. People just couldn't get their hands on enough usable money.
Right.
This caused huge problems for small businesses, the ones running almost entirely on cash. People stopped spending money unless they absolutely had to, so you saw this big slowdown. Banks were completely overwhelmed, massive queues, people trying to deposit the old notes, desperate to get the new ones.
I remember seeing pictures of those queues.
Exactly. But interestingly, it also forced this rapid shift towards digital payments. People started using mobile wallets, cards, whatever they could, almost out of necessity.
So that was the immediate shock. What about the longer term? Did it actually achieve those big goals like boosting digital payments and formalizing the economy?
Well, looking back, there were definitely some significant long-term shifts. Digital payments absolutely saw a sustained increase. Mobile wallets, online banking, they became much more mainstream after that.
So that objective was met to some extent.
To a large extent, yes. And the formal economy did grow. Millions of people, small businesses too, who'd mainly dealt in cash before, they had to open bank accounts, get into the system.
Which presumably helped with tax collection.
It did. The number of income tax filers went up noticeably because more transactions were now traceable. Harder to hide income.
But it wasn't all positive.
Oh.
What about the overall economy?
No, there was definitely an economic cost. The GDP growth rate took a hit. It dropped from around 8.3% before demonetization down to 6.8% in 2017. So a temporary but significant economic shock. But on the flip side, it did give a major boost to financial inclusion. Many people, especially in rural areas who were previously unbanked, were brought into the formal banking system for the first time.
It's really a fascinating example of how, I guess, a disruptive government action can force quite rapid systemic change, even if it's painful in the short term.
Exactly. A high short-term cost, but some undeniable long-term shifts.
Okay, so that's the picture within India. Big changes, big disruptions. Now, let's pivot to Nepal. Because the effects inside India were huge, but the ripple effect on its neighbor, that's a whole other layer to this story.
It really is. And understanding that requires understanding just how tightly linked these two economies are, especially when it comes to money.
Right. Can you unpack that relationship for us, the India-Nepal currency connection?
Sure. It's quite unique. First, there's a long-standing fixed exchange rate. 1 Indian rupee equals 1.60 Nepalese rupees. It's pegged.
Oh, it's fixed rate.
And crucially, Indian currency, the INR, is widely accepted and circulates freely in Nepal, especially near the border, but really across the country for many transactions.
So people in Nepal hold and use Indian rupees regularly.
Absolutely. Plus, there's a huge amount of remittance. Many Nepalese work in India and send Indian rupees back home to their families.
And the Nepalese rupee itself.
It's actually partially backed by Indian rupee reserves. That's part of how they maintain that fixed exchange rate. So their own currency's stability is linked to the INR.
Wow. Okay, that's a deep connection just on the currency side.
And it goes beyond just currency.
How so?
Well, India is Nepal's largest trading partner by far. They share this long, open border, which means goods and people move back and forth incredibly easily. Lots of informal trade happens there, too. And because Nepal is landlocked, it depends heavily on India for access to the sea. It uses Indian ports like Kolkata for its international trade.
Right. Transit is key.
Exactly. Add in the employment factor, the remittances we mentioned. It's not just neighbors, it's a deep economic interdependence.
So when you lay all that out, it becomes crystal clear why a massive policy shift like India's 2016 demonetization wouldn't just stop at the border.
Precisely. It was bound to send shockwaves into Nepal. They're just too closely linked.
Okay, so let's get into those shockwaves. What actually happened in Nepal when India demonetized those notes? The source talks about major money problems, trade disruptions.
Yeah, the monetary impact was immediate and severe. Nepal basically plunged into a liquidity crunch almost overnight.
But cash shortage there, too.
A major one. Because so much Indian currency was circulating and suddenly the most common high-value notes were unusable. This meant huge losses for ordinary Nepalese, businesses, anyone holding those banned INR notes.
They were just stuck with worthless paper.
Pretty much. And exchanging them was incredibly difficult. India's central bank, the RBI, put strict limits and short windows on exchanges, which were almost impossible for people in Nepal to meet.
What about that cross-border trade you mentioned, especially the informal stuff?
It just collapsed. That informal trade relies heavily on cash, often Indian rupees. When that catch became invalid, daily commerce along the border just seized up.
Which means livelihoods.
Exactly. Economic hardship, loss of livelihoods, particularly in those border towns that depend so heavily on that daily back-and-forth trade.
And what about the remittances? The money being sent home by workers in India.
That became a huge problem, too. There were major delays in getting money home. And even when it arrived, people faced massive problems converting the Indian rupees, especially if they were the banned notes.
So the financial lifeline for many families was suddenly unreliable.
Very unreliable. It created immense stress.
Nepal's central bank, the Nepal Rastra Bank, the NRB, they must have been scrambling. What could they even do?
They were under enormous pressure. They struggled massively with those exchange limits set by India's RBI. They just couldn't process the volume of old notes within the Indian restrictions.
So they were caught in the middle.
Completely. The source highlights the unprecedented operational strain on the NRB. It really exposed the vulnerability of Nepal's system to decisions made next door. They were dealing with a crisis they had absolutely no hand in creating.
It's easy to get lost in the economic figures, the trade numbers, but the source presentation also stresses the human cost, the social and psychological impacts in Nepal.
That's such an important dimension. It wasn't just about lost money, it was about the mental toll.
What kind of impacts are we talking about?
Widespread stress and anxiety. People were facing huge financial uncertainty, seeing their savings potentially wiped out. This understandably led to a loss of confidence, a distrust in currency stability, not just Indian currency, but maybe even their own system's resilience.
And the frustration, too, I imagine.
Huge social frustration. Anger about the lack of clarity, the feeling of being caught in something beyond their control, the perceived unfairness of it all.
Were certain groups hit harder by these sort of non-financial impacts?
Yes, definitely. The source points to the elderly being particularly vulnerable, often more reliant on cash, perhaps less able to navigate complex exchange processes or digital alternatives.
Right.
And also the unbanked populations. People without formal bank accounts had very few options when their cash became invalid.
And external factors played a role, too.
Absolutely. The anxiety was amplified by what was happening in India. The news coverage, the public sentiment spilling over the border, it created this heightened sense of panic and uncertainty in Nepal as well.
So, faced with this absolute crisis, monetary chaos, social distress, what did the Nepali government and the NRB actually do? How did they respond?
Well, the first immediate step was the NRB officially banning the holding and carrying of those old Indian Euro 500 and 1,000 notes within Nepal, trying to contain the problem, I suppose. Then the government formally reached out to India asking for help, requesting a mechanism to exchange the demonetized Indian currency that was held by Nepali citizens and institutions.
Did that lead anywhere?
They actually formed a joint task force to figure it out. But according to the source, and this is quite telling, no clear result came from it.
So, no solution was found for exchanging those notes.
Effectively, no widespread solution. The source states the NRB still holds about 5.5 million worth of those old Indian notes today, with no exchange deal ever finalized. It's a tangible reminder of the unresolved issue.
Wow, that's incredible. What else did they do?
Well, looking forward, the NRB advised the public not to use the new high-value Indian notes, either the new 500 and the 2000 ones. A clear signal they wanted to reduce reliance on Indian cash.
Try to insulate themselves a bit more.
Exactly, and they started actively promoting digital payments within Nepal, developing their own systems, and even planning a national payment card system, trying to build up their own financial infrastructure.
So, emerging from this really difficult period, what were the big lessons learned for Nepal? What did this whole episode teach them about managing their economy and their relationship with India?
It seems like it was a harsh but powerful lesson in several areas. Firstly, the absolute need for a formal, robust currency exchange agreement with India. Something predictable and reliable, not ad hoc crisis management.
Makes sense. Avoid being caught off guard again.
Precisely. Secondly, it highlighted the risks of being overly reliant on Indian currency circulating within Nepal. So a push towards promoting the use of their own currency, the Nepalese rupee, became critical.
And the digital push.
That became a major takeaway too. Encourage and facilitate digital payments much more aggressively to reduce dependence on physical cash, especially foreign cash.
What about the diplomatic side?
That was another lesson. The need for really quick, decisive diplomatic action when these kinds of cross-border financial shocks happen. And overall, the need for Nepal to build stronger contingency plans, better buffers for currency-related issues to enhance their own financial resilience.
So it sounds like the crisis, as damaging as it was really forced Nepal to think strategically about its financial independence and modernization.
You could definitely say that. It exposed vulnerabilities, yes, but it also acted as a catalyst for change, pushing Nepal towards greater self-reliance and strengthening its own financial systems.
So, wrapping this all up, what's the big picture here? India's demonetization wasn't just a domestic policy experiment. It was this stark demonstration of how interconnected our economies are.
Absolutely. It showed how one country's decision can create massive waves, often unforeseen consequences, across borders, especially when there's such a deep economic link like that between India and Nepal.
And the conclusion from the source material itself?
It summarizes it well. India's demonetization hit Nepal hard. It laid bare Nepal's vulnerabilities regarding currency and policy dependence. But crucially, it ultimately spurred Nepal to take steps to reduce those risks, modernize its financial infrastructure, and chart a path towards greater financial autonomy.
It really leaves you thinking, doesn't it? This whole deep dive. What does it tell you, our listener, about, say, the delicate balance in economic partnerships, or the fragility of economies that rely heavily on informal cash transactions?
Or maybe the fundamental importance of a nation trying to maintain its financial independence in a world that's increasingly linked.
Yeah. How ready are countries really for the ripple effects when a neighbor makes a sudden, drastic economic move? Definitely something to think about.
Food for thought until our next deep dive.